Congratulations for taking ownership of your financial plan by tuning into the Federal Employee Financial Planning Podcast, hosted by Mason & Associates, financial advisors with over 3 decades of experience serving you. You will rest easy once your plan is done. You will see clearly just how you have won. Gone are the times where you'd hope and pray. It's gonna be a bright, sunshiny day.
Welcome to the Federal Employee Financial Planning Podcast. I'm John Mason, certified financial planner, and with me today, the normal crew. We've got Tommy Blackburn, Ben Rakes, and Michael Mason, your hosts of the Federal Employee Financial Planning Podcast. Today's episode, we're going to be talking about not a fun topic, guys. We're going to be going through divorce and what that means for federal employees going through a divorce or starting that process. Before we get that kicked off, let's go through a few housekeeping items, which I think our audience always likes to know about. Number one is we're starting to get more questions come in, which is wonderful. We're actually going to answer those probably via email to the people who are asking. And then I think this most recent question that came in via the Bailey Act, we're actually going to post a YouTube response to that one as well. So if you have questions, Mason FP, like Mason Financial Planning at masonllc.net. So Mason FP at masonllc.net. I don't know if it's a disclaimer, but I think it's catchy. We're financial planners first, and we do content creation second. So we do live and breathe financial planning every day. And our primary mission and focus in life is serving those who have trusted us with their financial plan. But we're also enjoying this too. If you'd like to become a client, you can start that process at masonllc.net. And if you want to hear from us from time to time, you can subscribe to our blog. Same thing, masonllc.net. We promise we won't inundate you, but we will keep you up to date with our thoughts, our educational content, and the stuff we're producing monthly. We'll keep you up to date on that. So a couple big action items there immediately for our audience. And I guess I'll also say our YouTube channel is kind of rocking and rolling, isn't it, guys?
Yeah, and we've got more things that we're hoping to do over there, but it's been really neat to see it and the podcast taking off the way they are.
And we have those videos posted on our blog. Our user is Mason Associates 4825. Once you help us reach whatever subscriber content we have to reach to be able to change our name, we will do that. So if you like the content that we're producing, of course, 5 stars here. Do all the things on YouTube, like, subscribe, share this content with those around you and those that you care about. So let's talk about divorce as a federal employee and some of the key things that we need to know. Divorce, when you're divorcing somebody that has one of the most lucrative benefits packages that exist in the marketplace today, number one, retirement planning is complicated by itself and divorce is complicated by itself. But Mike, when we start throwing in federal benefits and military benefits, and for today's episode, we might as well say anybody that has a lucrative benefits package, whether it's a state retirement like California or VRS, you kind of fall into the same category, I think.
Well, depending on how many shows you've listened to, I'm sure you've heard you're a millionaire, in your benefits package plan like one. Many times divorce attorneys don't see you as a millionaire, right? Sometimes you don't see yourself as a millionaire. And again, it could be your spouse that's the federal employee. But once divorce creeps in, we don't say my retirement anymore. We don't say my TSP, my IRA. All the my's have to go to our, retirement. And so the spouse that's not the federal employee better have a financial planner and an attorney that knows that benefits package is worth, millions, and plan accordingly.
We did a recent episode, guys, on expect, demand, work with a fiduciary. And one of the things we talked about in that episode was that you can't legislate morality, but you also, what did you say, Mike? You can't how to or something. What was your statement?
Fiduciary person, he may have the want to, but he has to have the know-how as well.
The
right?
know-to is
The
what you
know-to,
said. You have
yes.
to have the know-to. And unfortunately, when you're going through a divorce, Tommy, and these folks maybe are working with a financial planner who doesn't have the know-to, we're going to use this more often, I think, or a divorce attorney that doesn't know the know-to, the federal employee pension or military pension or California pension, those are all off balance sheet. Those aren't just like readily apparent. You can't just go to Schwab or Axos or TD Ameritrade and figure out the value of those assets.
Yeah, it comes back to what we talked about in that last episode of due diligence. Do some due diligence into who is giving you counsel when you go through these, because my read of it, usually most divorce attorneys, this is a transaction. I'm going to get through the transaction. I've got the standard playbook. It's not so much help you figure out how to come out of this in the best way forward. And maybe we'll talk about this too. A lot of times the best way forward is to do this amicably, and let's not fight over it, because usually the only people who win are the attorneys in that situation. So if we can try to not bankrupt each other, just accept this is going to be what it's going to be, how do we preserve this and get to the fairest answer? Even though I know it's a very touchy subject, nobody necessarily wants to always be fair when we're going through this, but we may only hurt ourselves if we're not wise about this.
And the fact of the matter, Tommy, and I think it starts with understanding, like, is it a joint account? Is it an individual account? So the fact of the matter is, at least in Virginia, and we can't speak to every state because there's community property states and different laws in each state, but generally speaking, like if you're married to a federal or military person, you as the spouse, you have earned half of that pension. So like half of it's yours. If it's a $40,000 pension, $20,000 is yours, $20,000 is that retired person. So it's understanding that from the beginning that like you're not really asking for anything. You're really more like demanding, like this is what I have earned being your spouse. And I think sometimes people feel maybe guilty, saying, well, I would like to have my marital share, please. It's like, well, no, like this is what we have accrued together. This is my portion. Maybe I'll be nice enough for whatever reason that I don't need your marital share. But the fact of the matter is it's mine until I give it up.
Right. It's a negotiation for essentially the marriage contract that we're breaking up. And I would say I have to almost view it now as like not so much of like maybe I'll be nice and give something up, but it's just here's what is important to each of us. Let's assign the correct values. And part of that is, what's the value of a pension if it's there? Are there health benefits, different survivor benefits? But not only that, but what about the tax attributes here? Like, let's realize that $1 million of TSP is not $1 million in the bank account. So we need to now let's talk about these pieces in the negotiation. How do we get down to what we both want, but we still are equivalent at the end of the day?
And to your point, there are so many different tax statuses of things like retirements, IRAs, Roth IRAs, the sale of a house.
Exactly.
Like all of these have different rules. And if you start going down the path of instead of me having half of your pension, I'm going to have the house. Or instead of me having half of your pension, I'm going to have a bigger TSP chunk. You start to get very dangerous. Like it's actually just easier to split everything in half because everybody retains the same tax status of everything. But when you start monkeying with the system and you start like picking almost like winners and losers in certain asset classes and certain tax statuses, you're really getting dangerous and overcomplicating things.
And I want to take this I think a step back to something that we always say to our clients when we are starting to engage with a prospect, or maybe we're meeting with a new client, or maybe even a client we've had for many, many years. Not only do you have to have a financial advisor that can adequately tell you, hey, this is actually what your pension is worth over your lifetime versus, okay, maybe we just take the house, or maybe I'll just take your small IRA and you can have the pension. It's really important to have both spouses in these meetings when you are meeting with a financial advisor. A lot of the times it's just either the husband or wife that's in the meeting, or maybe it's both of them in the meeting, but only one is paying attention, only one is asking questions, only one is answering to emails. God forbid a divorce happens and you've got one client that knows exactly the exact dollar value of every asset that they own and their pension and their health benefits, and then there's just someone who's been left in the dark. That's a situation where you can really easily get taken advantage of. And as we've all said, we want this to be a fair process. How can it be fair if you don't know what you've got.
Well, you've opened up a can of worms.
Yeah, you took us down a path you said you didn't want to go to when we started this.
Yes, you've opened up a can of worms, and I think it's worth for our audience hearing this, even though, so this is like a tangent alert, we kind of have moved
guys.
off of, it's okay, we've moved off of divorce a little bit, but it's important that both spouses be invested in the financial planning relationship. I mean, we have seen time and time again how detrimental it can be to a surviving spouse who has no clue what's going on in their financial plan. And spouses have strengths and weaknesses. I think we could all share stories about, I know I have a surviving spouse, a widow, who had never pumped gas a day in her life. Never once had filled up the vehicle with gas, and then her husband passes away, and now she has to learn that at whatever age. Or conversely, maybe Joe, the husband, is very savvy with investments and retirement planning, but he's never opened up a laptop, has no idea where the passwords are, has never paid a bill in the last 40 years, and then Susie passes away. It's important that we start thinking about the succession plan or succession plan of these various actions that we all do. It's okay to outsource some things to your spouse, Tommy, but we can't outsource understanding what all is involved.
Absolutely. And where I was even thinking about too is if we're working with a fiduciary, as we just recorded that episode, that fiduciary can't now say, well, I've always worked with Joe and Joe's the one who knows everything, and now I'm going to leave, Sally in the dark. So that's another example of a fiduciary needs to know, hey, you're both my clients now. I've got to work with both of you. And maybe if you're the spouse who isn't in the know, or y'all are coming at this the first time, that's, again, doing your due diligence, finding a fiduciary, finding somebody who knows you and can make sure you don't miss these assets. Also, everybody's got to be nice and transparent with each other. I think that's actually part of the law on this. I don't think we can intentionally hide assets, so that's almost fraudulent, I guess, if somebody starts going down that path.
Well, that's when we exit stage left anyhow, right?
Exactly.
We're just not going to go down that road. Tommy, you and I had a call the other day, unfortunately, on this subject, and I wrote some things down because I avoid this like the plague.
Me too.
We have so much more fun working with couples that are in love and building towards the same path. But the member of this family with the retirement, he kept saying, I just want to make sure I'm going to be okay. He knows, as we told him, it's no longer my TSP, my retirement. It's our TSP, it's our retirement. And he kept coming back to, I want to make sure I'm okay. And that's when I told him, I said, well, your wife does too. So we want to make sure you're both okay. And if at the end of the day you both have the same amount of income, then that's a winning divorce. That's a winning divorce because they've been married
40 years. Let's call it 40 years.
Right.
Just round. Hopefully after 40 years, we do have love for each other and we do want this to come out. We've raised a family. So yeah, there's those issues. And it was striking to me too, because it's when did this TSP, when was it ever yours in a marriage, right? Maybe if we got married later in life and, I had accumulated some assets before we were married, but it's kind of like the entire time of marriage, this is ours. This is the way we should be viewing it. And again, in the divorce, it is ours, and now we've got to split it. It never was mine or yours.
Right. And it was kind of funny. Well, what was the book that was referenced that she had downloaded? The OPM's Guide to Attorneys?
There's an attorney's handbook from OPM, and then there was Guide to Spousal Benefit. I'm not exactly sure what they called it, but yes, there's a publication they put out.
And as we're talking about this and the things to be concerned about, she was armed with that book, and she thought, if I just take it to the attorney, I'll be okay. You really need a financial planner, in that equation, because there's just so many nuances, John, that we've seen over time. The book's not going to tell you, hey, it costs nothing to keep the ex-spouse on as the in-service survivor benefit. It doesn't cost anything, and that's, it's a winning proposition when the person that has the pension makes sure that happens. It doesn't cost him or her anything, and you win with doing the right thing.
Well, you're now taking us down some various like steps that we need to take in the divorce, which I think is perfect. So we're going to go through some like factual. This has kind of been like high level, like more like feelings and emotions and like what's going on. But let's start getting into some of the numbers about what it means to get divorced as a federal employee or the spouse of a federal employee. And I will say, as we dive into this subject matter, that it's really hard. Like we've talked many times on this podcast, how do you find a financial planner? How do you find one that's qualified? What's your asset minimum? If somebody called us and said, "Hi, I'm Joe, I'm getting divorced this year. Me and my soon-to-be ex-wife Susie need to hire Mason and Associates," we'll probably say, "Why don't you both call us individually once the divorce is finalized?" And that's not because we're mean-spirited. It's just because that's not our specialty. We don't want to live and breathe divorce throughout the year. So I just caveat that for our audience. If you find yourself in a divorce situation, understand it may be hard to find a financial planner that wants to guide you start the relationship in divorce. We've
unfortunately been exposed to it, so we're knowledgeable in it, but it's not an area we enjoy.
We help existing clients go through the divorce process if requested to be there, but we're not actively seeking that line of business. So let's first talk about adjudication. And I think adjudication is something very important as you have a divorce, because when we get ready to retire, all of our federal employees know this. When I retire, I go into a black hole and I get really scared because I have no idea when the government's actually going to pay me. Whoever wants to take this, how long is a normal adjudication? And then how long do you think an adjudication could take if you had a divorce decree or separation agreement on file?
So sometimes we see adjudications seem like they get done in a month, which is, don't expect that. And that's, lightning fast. Usually I would say it's probably a few months, maybe about 3 months feels about right. Maybe it takes 6, but that's on the long end. Then if you have a divorce decree on file, you get kicked to a whole special world where everything slows down. And from what we've seen, that's anywhere from like 6 months to a year, I think, and what I've seen, and I assume what you guys have seen as well. And not only does it now slow down quite a bit, but it's almost like mandatory withholding when you take a TSP distribution. It's like, oh, well, there's a mandatory, we lower the interim payment when there's a divorce decree on file. So instead of you getting 70 to 80% normal interim pay that you would get on that pension, you're probably going to see like 30% of what you were expecting. So it is really, that's good advice, John. Be aware of what that does in this process.
I think OPM may even say on their website like 12 to 24 months adjudication in a divorce. Now we've written letters to court-ordered benefits department. I think the address is somewhere in Washington, D.C. I know you and I, Tommy, both have had a situation where an ex-spouse was entitled to like 5% of the pension.
We're sending spreadsheets to OPM, just if we can help, like, guys, this is unreasonable.
This one lady I'm thinking of, her pension was like $5,000 or $6,000 a month. And during her interim status for 9 months, they were going to pay her like $1,500 a month because her ex-spouse may or may not have actually been entitled to something. And it was below poverty level at that point. It just was not something that was sustainable.
You're causing harm to this retiree at this point because they were planning on this cash flow, and it's really acute for a CSRS. That's a huge income source. You knock that one down to 20 or 30% of what they're expecting. That's a material change in cash flow.
And unfortunately, Mike, I know we've battled this over time as well. Like, we'll meet with a client. Typically, it's a single person who has already been through a divorce, and they'll come in. We mandate or request that clients provide us that divorce decree and separation agreement, and we see it, and we're like, "Hey, Joe, like, it looks like your ex-spouse is entitled to 25%, but the language kind of stinks. It's not really that great. I don't think the attorney really drafted this appropriately." And we've tried to send divorce decrees and separation agreements to OPM in advance or request letters from OPM documenting, like, are you going to honor this, yes or no? And what's the response been?
Yeah, they ignore you. They can't. They
no
won't.
Response.
Right. Yeah.
No response. And how frustrating from a financial planning and retirement planning side. We have this piece of paper. We think the divorce decree is not going to hold up. We send it to OPM. We ask for their opinion because that actually matters whether or not they're going to uphold the divorce decree for the retirement projection. And unfortunately, we've been in the position as advisors to say, here's what plan A looks like if they do it. Here's what plan B looks like if they don't honor the divorce decree. We'll have to wait and see.
You have to wait, until you're at the finish line.
But going back to working with someone who knows what they're talking about, I mean, think about the value of working with a client that knows that they're going to have a long adjudication process and leading up to that saying, hey, in the meantime, there might be a 24-month period where we're going to have to take TSP distributions because you think you're going to get $6,000 a month and you're actually going to get $1,000 a month. I mean, know who you are working with in these situations. Know the attorneys that you're working with. The value that we can add in this process is just, it's unbelievable.
You have to know your client. You have to understand. And I thought you were going to say, Ben, was that how valuable is it to have two scenarios? Here's the scenario if the divorce decree is finalized and they award your ex-spouse something. Here's the other plan. Maybe we can kind of like hope for this secretly and like not feel too bad that we're hoping that it doesn't hold up. But knowing like under either scenario, we're going to be okay.
Exactly.
Under either scenario. But can you imagine? Can you imagine waking up surprised and being like, I had no idea, or I forgot about the divorce decree. It used to be called EBIS. Now it's the GRB platform for a lot of our clients. You think the GRB platform, Tommy, factors in a divorce decree and separation agreement?
Absolutely not. Yeah, smoke would come out of the screen if it began trying to think through that. Yeah, so that you can't rely on that. And I guess you kind of hit on another good point. Mike was mentioning you did hit on a good point, but the OPM handbook and so forth, and like whether this is going to be honored. And what that is this is not the standard private sector pension, even divorce decree language. It has to be the OPM standards. That's why there's a handbook out there for attorneys so that they can craft the order to be in compliance with, because it is not an ERISA plan. That is.
Yeah, if you use the word quadro, which is qualified domestic relations order, which is private sector, and he's CSRS, and the quadro says she gets 40%, it's not gonna hold up. At least that's what we're told. It's not going to hold up. You have to use specific language. John, you've used several scenarios of what the non-federal spouse. The formula is pretty simple. Years married. So if you've been married and in civil service, let's say 35 years. So 35 years, and then you divorce, and you have 5 more years. So it's 35 divided by 40. Times 0.5, which is 0.5%. Well, it's easy. It's like if it was 40 and 40, then one gets 50%, the other gets 50%. Now, once in that scenario, I think it's 87% times 0.5. So that's how it's determined. Very rarely do we see exactly 50-50, because spouses get bitter. The one that's going to retire, or that has the pension, they hang on forever, right? I'm gonna sock it to her, and I'm gonna
never
keep working.
turn it on and never get any of it.
It's so you just defined the marital share, formula, which is perfect. So like for our FERS employees out there, your pension is years of service times 1% times your high 3. If you're divorced, then it's 1% times years of service times high 3 times marital share would give you your percent of that retirement pension. So the numerator is the years you were married. The denominator is your total years of service. And so although you guys are having fun at this, I think it's okay to laugh at it. It's like, I'm not turning this on because I'm not paying him or her anything. We've done the math, and it maybe doesn't work out perfectly, but the non-federal spouse will get about the same amount of pension regardless of when you turn it on. So like if you were to work 50 years or 15 years after the 35-year marriage, 40,000 is 40,000 is 40,000. It's just when did it get turned on? So you're not necessarily like reducing the amount of income. You're just reducing the time, I guess.
Yeah, you're just delaying. Yeah, you're making their cash flow terrible until you turn it on, because I think the point you're driving home there is just they continue working, so our years of service went up, and the high 3 hopefully went up, should have went up. So the pension got bigger as we kept delaying it, so their proportion went bigger. They just had to wait forever to get it.
They have a lesser percentage of a bigger amount, right? So it's fascinating. We've seen all of this, and hopefully, if you're a federal employee and you're going to go through divorce, hopefully we can just keep it on the up and up. Hopefully we can keep attorney fees down and make this easy and just do this marital share, which is really important for federal employee health benefits, isn't it?
Yes, it is. It is a big consideration. It's something we definitely want to keep our eye on. There are, some stipulations there that we've got to follow as to whether we had it before, if we can follow it in, and just understand too, if you are that spouse that's going to continue it, you get to pay both sides of it based on our understanding. So it's going to be pretty expensive coverage. Doesn't mean we should be aware of it, and it should be part of a consideration in all of this.
And again, working with someone who's qualified in this field, you might not get anything health benefits wise if that's not in the divorce decree.
We've said it for a long time. Federal employee health benefits is one of the best benefits that our federal employees have, both while they're working and in retirement. It's like having another pension. And the reason it's so lucrative, and folks, don't quote us on this exact number, but if you're paying $400 or $500 a month for FEHB, the government's kicking in over $1,000 a month, offsetting quite a bit of that cost, 2/3 or more of that cost probably. And what Tommy was saying is, if you are that divorced spouse and you're going on FEHB, instead of paying $500, you could be paying like $1,500. May not be a horrible option for you, but there are other options like the Affordable Care Act or private insurance or your own employer or what have you. So quite a bit to think about through FEHB. And this kind of like trickles into every decision, both you retiring as a single person, retiring as a married person, survivor benefits and the impacts on FEHB. That's a whole separate podcast. And I'm sure we've covered it, but just throwing it out there. So Mike, you've had experience with maybe one of the most complicated divorce situations of all time. And I think maybe rather than me trying to lead you in, I can just say, share with the audience the crazy story that you've been working with for the last 30 years.
Yeah, and I would say to everybody, Ben, you echoed it earlier, getting the attorney, finding a good divorce attorney that's going to understand OPM's guide, to court-ordered settlements, I think is what it's called, or close enough.
Close enough.
But then you need a financial planner. You need a financial planner, and there are some out there that are divorce. They're certified divorce credentialed financial planners. That doesn't mean they know federal benefits. But let me just give you a scenario where I'm presented with a divorce decree. The divorce happened before I met the client, and there was a marital share. And let's say the marital share was 50%, at that point in time. Well, that only kicks in, guys, when the federal employee retires. So if we didn't address survivor benefits, in-service survivor benefits, if we didn't address that in the divorce decree, the ex-spouse, as soon as Joe retires, she'll get X dollars a month, but she's getting nothing until Joe retires. What if Joe dies before he retires? Well, if we didn't address in-service survivor benefits, then the ex-spouse is never going to get anything, and the current spouse is going to draw in-service survivor benefits because it wasn't addressed, in the divorce decree. And then also not addressed was a mandate that when retirement finally happened, that they would share the premiums, ex-spouse and current, they'd share the premiums for survivor benefits. So if that was left alone, then the ex-spouse may get 1 month. Let's say it was $4,000 a month. May get 1 month of $4,000, and then retiree die, and that retiree could have protected his current spouse because they didn't address it. So, you're working until age 65, and you think I'm going to get this, and I'll be covered for the rest of my life, and the divorce decree just didn't do it. Fortunately, we were able to negotiate, with both spouses, current and ex, for a more amicable settlement, which is, I guess, what fiduciaries and folks that specialize with federal employees know how to do.
And that's where it would have been really nice if we could have actually sent divorce decrees and separation agreements to OPM, got statements, had it in writing, be able to make some educated decisions because let's face it, every year that you live longer, every day that you live longer, you're less insurable, you're less healthy typically. And our pathway to fixing some of these things, like not having in-service survivor benefits, not having retirement survivor benefits, is life insurance. And it would be nice to know that 15 years earlier. It'd be nice to know it at 50 that we need life insurance for our ex-spouse rather than waking up at 65 and not being able to afford it or being completely uninsurable.
Right. And as this story ends, that everybody, both spouse and ex-spouse at death, have been taken care of because we knew, everyone had something to gain. The ex-spouse, the dominoes fall the wrong way, got nothing. Dominoes fall the wrong way, current spouse got nothing. So everybody came to the negotiating table, with stake in the game. And that's why we were able to fix it.
It has been watching you go through this, because I've been here 13 years and I've been seeing this story play out for 13 years. The fee, the amount of time that you've spent working with this family, now it's not always this way, but you could have never charged an appropriate fee. An attorney could have never charged an appropriate fee that anybody would have been able to compensate us for over the time that you've been working with this family. It is, one, knowing all the scenarios, two, the amount of effort that you have put in over that time. I mean, the fee would have been 6 figures plus, would have had to be 6 figures plus. And I feel for folks that don't have Mason and Associates. I feel for folks who don't get or have access to qualified financial planners because, like Tommy, you've always said, our clients have us on retainer. Mm-hmm. And when this type of event happens, we kind of just eat it. Right? And when I say eat it, I don't mean in a bad way. It's just it's an abnormal year, and we just have to roll with the punches.
I was going to say that's also why we're selective about who we work with and the amount of clients we work with, is because Mike can only do that so many times. I mean, he's only got the capacity to do that for so many people. So that's why we can't help everybody. We want to help as many as we can. Hopefully the podcast is helping.
I think this scenario reminds me of something we've all said a lot around this table is you don't know what you don't know. A lot of times when we talk about divorce, a lot of people think of a nasty divorce where someone's not taking their pension for as long as they possibly can because they want to hurt their ex-spouse or they want to do some iteration of that. It actually might be a situation where it's a really amicable divorce and people are really hurting each other financially and they have no idea until someone like Mike Mason steps in who knows the rules and has done this for decades. Again, I can't stress enough, if you're someone who's going through a divorce and you're a federal employee, you really have to work with someone who knows what they're talking about, who has experience and who knows the rules.
We choose, I think, to believe that most people are inherently good, even though maybe there's data that says that's not true. But I think what we've found in our careers is that most people are inherently good. And the divorces that I've personally seen and the clients that we've worked with, maybe we're just really good at picking them. If divorce happens, it tends to end as amicably as possible, as easy as possible. And hopefully, Ben, to your point, that's the direction that it should go. If you've spent a life together, if you've spent time together, everybody gets what they're entitled to as smoothly as and easily as possible. You avoid the fights, you avoid the arguments, and you just kind of let math take over at that point.
It works for us because these people have been in our lives and we've been in theirs, and they understand that we know, right? It works for us. You said it earlier. You feel for the folks that don't have Mason and Associates in your world, and I'm not going to badger or hurt every attorney out there, but it seems like he's got his attorney, she's got hers, and they spend all this time battling back and forth, and the only thing that happens is each attorney, is going to make more. And I would say to you that a qualified financial planner that isn't on retainer like we are is probably worth exactly what each one of those made. So multiply, his fee, her attorney's fee, and pay that. But nobody would ever do that. They're begrudging the attorney's fee as it is, and we would be as valuable as both those fees, in making sure. We'd probably shorten the period, and make sure that everyone knew what they were getting. So it's find a way to make that marriage work is the best advice.
And disclaimer, we're not marriage counselors and do not give marriage advice and do not hold ourselves out to be marriage therapists in any regard. But yes, to Mike's point, guys, let's go around the table with any action items or final closing thoughts. It's been another awesome episode. I've enjoyed it, recording with you guys as always.
Yeah, my first action item, last note I made, you finally get that divorce decree done. It's filed, with the courts. Make sure your attorney immediately files it with OPM, because there's a time frame for that too. So file it with OPM instantly and share it with your financial planner.
Work with someone who knows federal benefits. I think there's been plenty of cases throughout this podcast where we've talked about the pitfalls that you could run into and even unintentionally hurting an ex-spouse where you didn't want to. Make sure you're working with someone who knows federal benefits and can easily outline the value of pension, health insurance, life insurance, all these benefits that are very specific to you.
I'll do the self-serving one, but I've got some others as well. Go ahead and share this podcast, like it, give us 5 stars. So that's our self-serving part there. Outside of that, I would say let's keep it amicable. That has been a message, a theme of this. Probably we didn't get a chance to get into it, but take a look at Social Security. It's kind of begin crafting too on the other side of this. Well, what does the financial plan look for us each individually now? So don't forget about Social Security. And mentioned earlier, make sure we're accounting for taxes. So realize that some assets are pre-taxed, so taxes need to be paid on it. Some are after tax, and maybe we even have some that are never taxed. So let's just make sure we're weighing things appropriately.
Oh my. You just got my mind going, and that's a whole nother episode on alimony and the taxation, tax deduction and taxability of alimony and how that would even differ from having a marital share in a pension. The marital share in a pension, just teaser for the audience, is better for both parties, or it's at least better for the person paying than it would be if you were paying alimony.
Yeah, absolutely, because they're just going to issue 2 1099s OPM, so each of you is going to get your share of his taxable income. So that is very straightforward, and that is a good teaser for maybe another conversation.
Folks, thanks for tuning in to another episode of the Federal Employee Financial Planning Podcast. One of my final takeaways is review everything. So if you have found yourself in a divorce or just in general, your life has changed, your legal documents probably need to be updated. You probably should think about updating your wills, your powers of attorney, your medical directive, or whatever your state's calling those big documents. We probably need those updated. Teaser on the Mason Associates 4825 YouTube channel. We're releasing some blast videos on advanced medical directives, powers of attorney, beneficiary changes, how all of that coordinates with your federal benefits. So we think you'll like those videos. So update bennies, update legal documents. Just remember, whether it's a divorce or any life change, we need to keep those updated. Thanks again for being with us. Remember, we're financial planners first. We do this content creation second. We'd love to hear from you at masonfp@masonllc.net with any comments or questions. And thank you for tuning in to another episode of our podcast. We'll see you next time.
You will rest easy once your plan is done. You will see clearly just how you have won.
The topics discussed on this podcast represent our best understanding of federal benefits and are for informational and educational purposes only and should not be construed as investment, financial planning, or other professional advice. We encourage you to consult with the Office of Personnel Management and one or more professional advisors before taking any action based on the information presented.